Same salary, same job. One person pays 30,000 in tax and the other one pays 15,000, and both living in Switzerland. And the difference, one of them knows something most expats never find out. And today I will tell you exactly what it is. In today's video, we'll cover how Swiss taxes actually work, what you're probably missing right now, and exactly how to pay less legally. Hi, it's Charlene. This is the channel where I share my 10 plus years investing and finance experience with you all for free. Like and subscribe for more content like this. So first, we'll talk about how Swiss tax actually works, the 3 layers. And here's the first thing that surprises most expats. In Switzerland, you don't just pay one tax, you pay 3. And at the same time, 3 different entities. So layer number 1 is federal tax. So this one is the same for everyone in Switzerland. So one flat fee structure. And doesn't matter if you live in Zurich or Zug or Geneva. Layer number 2 is cantonal tax. So each of Switzerland's 26 cantons sets its own tax rate. This is why people obsess over which canton to live in, because the difference is enormous, right? Layer number 3 is city tax, some people call it, or village or commune. So even within a canton, each small, I would say, city or village charge its own additional tax. So your total income tax is federal, cantonal, and city level, all added together. Welcome to Switzerland. And a lot of people say, oh, which cantons are the cheapest then? So, or which city? This question matters more than most expats realize. Where you choose to live in Switzerland is really one of the biggest financial decisions you've ever made here. And the cheapest cantons for income tax usually. Number 1, Zug, for example, consistently the lowest in Switzerland. For example, a high earner can save tens of thousands per year compared to living in elsewhere, for example, in Zurich or Geneva. And number 2 is Schweiz, so very close to Zug. Great option if you want to, for example, lower taxes without the Zug price tag on property. And then we have Nidwalden and Obwalden. I would say also significantly lower, below average. So the most expensive, for example, Geneva, and for example, some parts of French-speaking Switzerland, they tend to have the highest combined tax rates. So to put it just in some real numbers, a single person earning, for example, 150K per year could pay around, let's say, 30,000 in taxes in Zurich, and the same person in Zug, maybe only 15,000 to 20,000. Like same salary, same job, different postcodes. And that difference buys a lot of fondue. So quick pause here. So if you want a clear framework for making smart tax efficient financial decisions in Switzerland, not just taxes, but your full investment strategy. So actually I have a free investment guide and a free investment class for you. It's built for expats and professionals here in Switzerland. So link is below, you can grab it and come back. And now let's talk about permit B and C. Which one are you? So this is one of the most confusing part for new expats. And it depends entirely on your permit and your income level. So for example, we have something called Quellensteuer. I hope I pronounce it correctly. So it's like tax at source. So if you're on a B permit and earn below 120K per year, for example, in Zurich, you're on a Quellensteuer. So Quellensteuer, okay, I hope okay, no judge, okay? And your employer deducts tax directly from your salary every single month, and you receive your net salary. And in most cases, you do not need to file a tax return. It's really simple, automatic, done. And you need to understand like Quellensteuer or tax at source is actually calculated on a standard estimate of your financial situation. So if your situation is a bit different, for example, if you have a pillar grade A, you have significant work expenses, and if you have a child, for example, you can file a supplementary return to claim those deductions back. And most people don't bother, and this is actually could be a very expensive mistake. Filing a full tax return depends on your situation. So for example, if you're on a C permit or on B permit earning over 120K or your spouse is Swiss, you file a full tax return yourself. This means you are responsible for declaring all your income, all your assets, and all your deductions. So every year by the deadline. So more admin, right? But also more opportunities to optimize. So let's talk about income tax, what actually get taxed. So your salary is the obvious one, right? But Swiss income tax also covers, for example, rental income if you own property, and interest income from savings, and dividend income from investments, and what they call is imputed rental income, the infamous called Eigenmietwerk. So if you own your own home. And a lot of people say, oh, what if I own my own home? I need to pay tax. Yes. So Switzerland tax you on rent you don't actually pay for a home you own. So it's only in Switzerland. And yes, it's going to be disappearing Eigenmietwerk, but till today, you still need to pay. So now let's talk about wealth tax. So the one nobody warns you about, and here it is. So actually, it is the tax most expats discover too late. Switzerland taxes your wealth, not just your income. So every year you declare your total net assets, your investment, your savings, your property value minus mortgage, and you pay a percentage of that total progressively. And the rate varies by canton, typically between 0.1% to 1% of your net worth. So on a, for example, 500K portfolio, that could be 500 to, in some really rare cases, 5,000 per year just for owning assets. And on a, for example, 1 million portfolio or 1 million wealth, so you can expect like 1,000 to a few thousand, every year, depends on where you live again and how much you have. And this is why wealthy people, they move to Zug and Swiss, lower wealth tax rates as well, same assets, much smaller bill. And this is also why knowing how to structure your investment correctly matters enormously in Switzerland. And now let's talk about withholding tax on dividends. So if you own stocks or ETFs, and this one affects you directly. When Swiss companies pay dividends, so basically 35% is automatically withheld by the Swiss government. And this is called, another German word called, what is this? Verrechnungssteuer. Okay, withholding tax. And the good news, so if you file your taxes correctly and declare your investments, you get most of it back, but only if you declare it. And if you forget or assume it's handed automatically, that money stays with the government. So for foreign dividends, withholding tax depends on the country and whether Switzerland has a double taxation treaty with it. So for example, US stocks, 15% withholding tax applies for Swiss residents under the US-Switzerland tax treaty. And this can be reclaimed in certain structures, but the process varies. The bottom line is declare everything. Get a tax advisor for the first year if you have a significant investment portfolio. Now let's talk about tax deductions expats can claim. And this is actually the section most expats never read. And it costs them money every single year. And here are the main deductions available to you. So Pillar 3A contributions up to $7,258 in 2026, fully deductible from taxable income. and it is one of the easiest and most valuable deductions available, okay? And then secondly is work-related expenses. For example, commuting costs, office expenses, professional development and training, and work equipment, for example. Then we have childcare costs. So if you have children in external childcare, a portion of those costs is deductible. And then we have charitable donations. So donations to 3 recognized charities are deductible up to a certain threshold as well. And then we have professional association fees. So for example, if you pay membership fee for a professional body, deductible as well. And then we have interest on mortgage debt. So for example, if you own property, mortgage interest is also deductible. So I would say overall speaking, for expats on Quellen you need to actively file a supplementary return to claim most of these if you have a lot to deduct. And they're not automatic, you have to ask. So basically, the Swiss tax office will not chase you to give you money back. So surprising, I know. And now let's talk about tax deadlines. Don't miss these, okay? And Swiss tax deadlines vary by canton, but here are the general rules. So most cantons, the tax return deadline, I would say, is 31st of March, right, of the following year. So your 2025 tax return is due usually, March 31st, 2026. So the good news is extensions are usually available. So most cantons grant them, automatically or on single request, basically. So some cantons give you until June, August, or even November with an extension. So don't just assume, check with your canton specific rules. And if you miss the deadline, can really result in fines and an estimated tax bill that may be higher than your actual liability. So no one wants that. And what happens tax-wise when you leave Switzerland? A lot of people, ask this question. So I would say, a lot of people or a lot of expats are thinking, and here's what you need to know. So when you deregister yourself from Switzerland, your tax liability ends on that date, and you file a final tax return to the portion of the year you were resident. And if you have a Pillar 3A or Pillar 2, you can cash them out. You pay a one-off exit tax on each, typically 5 to 10%, depending on canton. And as we discussed in my Pillar 3A video, the exit tax is that is almost always less than what you save over the years. And if you're moving to an EU or what they call the EEA country, right? And there are restrictions on withdrawing certain portion of your Pillar 2. And Switzerland is thorough, even in a goodbye paperwork. Now let's talk about your next step. So Swiss taxes are complex. 3 layers, cantonal differences, wealth tax, withholding tax, deadlines, deductions most people miss. But here is the honest truth. The expats who understand the system pay significantly less than those who don't. So same income, same country, very different outcomes. And actually, I've put together, like I mentioned, 2 free resources for you to help you take control. The first is a free investment guide covering the 5 steps to build your strategy in Switzerland, including how to use the tax system to your advantage. And then we have a free investment webinar where I go deeper with real examples built for expats and professionals here. So both links are below, no jargon, no pressure, just clarity. Because Switzerland rewards the people who take the time to understand it. I will see you there.